What's happening nationally in real estate? Here's what you need to know about the changes in the housing market. Hi, this is Tanja Odzak with our East Bay home brokered by eXp Realty. So, calculated risk concludes that the annual growth rate of 19.7% is probably close to a peak, and that the year-over-year price increases will slow down as the year continues. Closings are set to decline roughly 10% year over year in the second half of 2021, and home price appreciation is on the cusp of flipping to a decelerating trend. Again, there will be an appreciation trend, just in a slower, more moderate paced performance rate compared to what we have been seeing in the previous months. This being said, prices are not necessarily declining. They're just appreciating slower and predicted to appreciate 32% in the next 5 years. Buying now before prices continue to exceed expectations is important, and buying now would be mission critical. And you can do this. When we forecast the fourth quarter of the market with the pandemic being in place, fall is usually the start of the slower season, but we all know that this has not been a normal year due to the circumstances. Potential buyers are seeing a slight rise in inventory, while mortgage applications jumped over 7%, which is the highest level that we have seen since April. Things are slowing down, but that's relative, and it's because the last 2 years have not been normal. However, 2019 was the last normal year, and we are already doing exceptionally better in existing home sales in comparison. So when will listings peak? They can continue to grow. It could continue at the rate it is, like it did in 2020, or fall. But there are 3 reasons listings can continue to increase throughout the fall and into the winter months. 1, there is a pent-up selling demand, and homeowners are starting to feel more comfortable with the idea of putting their home on the market since the pandemic is shifting, and as more people are getting vaccinated, therefore having people come into their homes for open houses or property tours is less of a potential risk. Second reason is new construction is taking place and starting to grow more rapidly, allowing more options for potential buyers and current homeowners to consider when they sell. There is no longer a lack of options compared to the options other sellers had in the past. Third reason, it's the end of the forbearance and is creating new listings. So don't worry, this is not going to lead to a wave of foreclosures, but it will allow homeowners to be able to sell their homes and have enough equity to more than cover the expenses of actually selling. As far as interest rates are concerned, it is possible that the rise in the next year could bring prices down. That may result in economic, financial, and confidence challenges, even with solid buyers in place. However, these drops or flattenings are nothing to concern ourselves with, as they will not come close in comparison to the crash that we saw in the Great Recession. Freddie Mac shows that there's a 3.01% rise in mortgage rate, and many factors lead to this increase. The economy is recovering, not as quickly as we'd like, but it is slowly making a comeback. There will be no sharp spike in a rise of prices, just a gradual growth inching back up, making interest rates rise a bit. The buyer purchasing power will cost more, and financing will be harder as the rates also rise. So let's connect and let's talk real estate. Let's redefine possibility, and I can help you. Feel free to reach out at any time. This is Tanja Odzak with our East Bay home brokered by eXp Realty, putting people before profit.